Olex Network 18, Mission Poshan, Bhavishya Roshan.
Now invite Gautam Dugat, the Head of Research Institutional Equities at Motilal Oswal Securities, to talk about earnings and individual stocks as well. Gautam, hi, good morning. Thanks for joining us. There are lots of stocks in focus, so I want to just discuss some of them with you. You know, this morning there's news reports indicating that Chanda Kochhar has been asked to go on an indefinite leave. For ICICI Bank investors, how do you approach this? Because a lot of experts indicate that as this cleanup takes place, of course this should have been done earlier, but now that this is happening, it's actually positive for shareholders in the longer run. How would you approach it?
We've liked the stock for some time now. We think that most of the issues on the asset quality are bottoming out now, and valuations are at around 1.1, 1.2 times on a core book. So obviously the risk reward is quite favorable at this stage. Clearly there can be some volatility on the stock for a couple of more quarters till this entire news flow subsides. And also they have an opportunity to, keep divesting some of the stake in their subsidiaries. So overall, from a risk return perspective, the stock is quite favorably poised, notwithstanding the fact that you can have a couple of quarters of significant volatility driven by news flow.
Okay, well, just to put it on record, to the SEBI, to the exchanges, they've only disclosed the fact that there is an inquiry committee. This is a mint report and we are still awaiting confirmation from the bank, and I would assume since it's such an important decision, the exchanges will have to be informed. I'm just leaving that on the table. I've been looking at the BSE announcements since morning, but at the moment no announcement has been made, nor have we got any confirmation to our question. Okay, well, Gautam, that said, how are you approaching the markets itself from now on? We are seeing this big divergence with good stocks doing very well, or rather the heavyweights doing very well, and the mid-caps in severe pain. Do you think this is going to continue for some time? I mean, does the Nifty reach out to 11,000 even as the mid-caps continue to show pain?
In fact, we've been pointing out the big divergence between valuations of mid-caps and large-cap for last 18 months now. The valuation of mid-caps to the large-cap had reached an unsustainable premium, and therefore it's quite good that that valuation is now correcting. It was long overdue and it's finally happening. As regards the broader market, I think we are in a situation, if I were to draw an analogy from cricket, where we have to survive on this pitch for a couple of quarters because the things as far as macro front are concerned have deteriorated to an extent, whether it is CAD or whether it is crude oil prices and therefore the consequent impact on inflation. So it's better right now to spend time surviving on this pitch rather than looking to hit the ball out of the park. And that basically means that you have to be in high quality names, high quality sectors which have done well, continue to do well because they are reporting strong earnings growth. Even for the quarter gone by, if you look at sectors which have done well, you have the same usual set of companies and the same usual set of sectors, be it auto, be it consumer discretionary, consumer staples, select set of private banks and NBFCs, and obviously the IT names which have been doing well. So the approach has to be that one shouldn't be too adventurous in this market, continue to favor large cap over the mid caps, and we have very concentrated choices as far as sectors are concerned. So out of the 15, 16 sectors that we cover, we have a disproportionate positive view on the 5 sectors that I mentioned, and very selective approach to rest of the 10, 11 sectors which are largely in the cyclical and commodity domains. So I think I would not expect a very significant upside at the broader market level from the next 5-6 months viewpoint, because you also have the political uncertainty to contend with, given that given by the results that came in yesterday's by-poll. So the political uncertainty part of the equation is continuing to look a bit scary at this stage, while the elections are still 12 months away and you can never predict elections, especially in India, that 12 months in advance. But clearly pays to be a little more cautious as far as valuations are concerned.
Okay, well, I was just going through your note, and within that you say that cement is a space that has surprised you this quarter in terms of earnings. Tell us exactly which are the stocks that you like, and would you expect this good quarter to continue in the next few? Because, there are pressures in terms of higher costs, etc.
Yeah, so the approach there has to be again very selective. Last quarter was very bad for cement, and this quarter has been pretty good because we were surprised on the way they managed to control the cost. While volume growth has been largely in line with the expectations, the surprise came from the cost element, and then actually that played through the P&L. What we like there again is some of the large caps like Shree Cement and Ultratech, where obviously valuations are at a significant premium to the mid-cap space. But what has also happened over there is the large players are consolidating their market share, and therefore below EBITDA line item you will continue to see that the cost pressures will continue to emanate, whether it is depreciation or interest cost. But I think that it is one of the relatively more cleaner sectors to play the cyclical upswing, if at all there is any. And obviously I would rather play cement than play the capital goods or deep cyclicals in construction or other spaces. So from that viewpoint, within the cyclicals, you can say that the relative preference is with cement. But from the quarter specifically for this fourth quarter FY18, the numbers were far better than what we'd expected as far as the bottom line is concerned. In fact, cement has been one of the big surprising sectors as far as numbers are concerned, apart from consumer, of course.
Okay, consumer, just a little more, you know, where you have good earnings, like say a Jyoti Labs, Parag Milk, Prabhat Dairy, you have valuations which are weak, but then they are mid-cap stocks, valuations which are attractive. But where you have a huge discomfort on valuations, the HULs and the Page Industries, you know, that's where are the defensive pitch according to you. So where would you tilt? Would you go towards the Jyoti Labs and the dairy companies, or would you tilt towards the HULs and you know, the Page Industries?
So our approach has been to stay with companies which have consistently delivered earnings. Now, the other names that you mentioned in mid-caps, there has been a significant volatility even within the consumer sector as far as earnings growth is concerned. But if you look at names like Page, Britannia, Pidilite, Hindustan Lever, Titan, those are the companies where we would like to focus our attention on. So while valuations are expensive, they've been expensive 1 year back as well, 3 years back as well, maybe 5 years back as well, and they will continue to remain expensive as long as the rest of the market doesn't deliver growth. So while it will be tough to justify valuations from a 6 months, 12 months perspective, but given that you are seeing an upswing in consumption now, especially on the rural side after 3 consecutive years of normal monsoon, government in an election mode obviously will try to indulge more on rural consumption and drive spending there. So obviously you will not see material derating, I would think, in consumption, but you can have time correction in some of these names from a next 6-9 months perspective. If you have a view of more than 1 year, 3 years, obviously these are the stocks where you want to play. We've been having preference for Lever or ITC for the last 2 years, and that has worked quite well. We continue to like Pidilite. We continue to like Titan even now. We think that there is a significant money still to be made in some of these names, given that you have now started seeing some benefits in some sectors of consumer sector from the unorganized to organized transition post the GST. Sectors like jewelry, sectors like adhesives, you're already seeing that happening. And as e-way bill implementation happens and things stabilize further, you will continue to see those movements of market share, sipping through. So while if one is focused on 1 year forward P, obviously these stocks don't make sense, but clearly from a longer term wealth creation perspective, these are the stocks one would have to be in.